How's everybody doing today? I love how we're backstopping legal conversations with accounting. So who here is an NFT founder or a DAO founder? Got a couple hands. Fantastic, fantastic. So my name is Eric. I am an NFT DJ. I got way too many JPEGs, but I also run a full stack accounting company for NFT founders, DAOs, as well as NFT platforms. And what I want to talk about today is something super important. How to, number one, not just set up to launch your NFT with great success, but also understand the accounting and the tax component behind it, right? Now, we know it's not something that's terribly sexy. We all love selling out a drop. We all love bringing a lot of DAO members. But a lot of folks don't realize that there's an accounting component and there's a tax component. So before I jump into this, I do have an ask. They're recording in the back there. I don't know if they're going to be recording or broadcasting it, but I got a lot of folks that would love to see a recording of this. If anyone records this entire presentation I'm doing and does it well, I'll pay $100 cash by the end of this presentation. I see these phones coming out, amazing. And if there's any pictures, tag me. My Twitter is at Eric Nghiem. Airdrop you a JPEG from one of my vast NFT collections, because we got a ton of them. Anyway, let's talk about accounting and tax. If you want to sell your company, and this is something that a lot of NFT founders ask me about, they're either looking to sell their company, they're looking to bring on venture capital money, they're looking to expand their company. It's important to have what we call clean financials, right? This isn't just a creator that's dropping an art project, that's making a little bit of money. We're talking about NFT founders and DAOs that are looking at getting large, getting big. Great accounting and tax support should be seen as an investment in your business, because that's what an NFT project really is. You're fundraising from your audience to raise money to build your project, but now you are a business owner. So first of all, what kind of business entity you have, especially if you're US-based, and where you set up your business matters, right? So first ask yourself, is this a lifestyle business? Am I an artist that's dropping a couple of one-of-ones? This is probably not a conversation that makes a lot of relevance to you. But if you're a project founder that's dropping a 10,000 piece collection, a 3,000 piece collection, you're looking at scaling, bringing on employees, bringing on team members, you're going to want to know how you set up your entity. Is it going to be an LLC in the US? Is it going to be a C Corp? Is it going to be an S Corp? What state do you register your business in? These are all very important considerations to think about. Different objectives require different structures. I had a great gentleman in the back that was an amazing artist, asked me a couple of tax questions, and I told him it depends, right? It depends on what the answer is, depending on where you are and what your objective is. With proper corporate structure and creative IRS provisions, you can avoid a bunch of IRS income tax. And this is the bane of all of us in cryptocurrency. A lot of us are like, we're in the crypto, fuck the tax guy, right? But taxes are important, and it's a big facet of operating a business. And let's be totally clear. Every crypto transaction, regardless of if you exchange it to fiat or not, is considered a taxable event. And this is a challenge a lot of founders are having right now. A lot of them have put a lot of their funds in Ethereum in their treasury, and they've received funds when Ethereum was $2,000, $3,000, $3,500, and left it in Ethereum. They owe income tax on that value when they received it. But now we all know Ethereum is sub $1,000. If you could imagine, you owe 100% of income tax on funds that have now decreased by 80% in value. So you want to be sure that you're building your project properly, you're creating proper corporate governance in how you manage your funds, and you have the proper tax structure set up so you don't screw yourself, right? My objective, if you want to come and work with us, that's fantastic. We have a large group of CPAs in-house and a large group of accountants and tax preparers. But if not, my objective is to help educate you, because I believe that Web3 is going to change the way that we do a lot of things. But it's not going to change the way we do things if the IRS and the tax man is after you and all of your money. Now, your wallet infrastructure is important as well. A lot of founders that initially come to us, they do their drop inside of their own personal wallets, which is very, very dangerous, right? You want to keep track of the basis of your tokens. You want to have separate wallets and a very specifically designed structure to make your project be successful. this is a sample of what we map out for some of our clients. And if you want to get a copy of this presentation and get this wallet map, again, hit me up on Twitter at Eric Nghiem. Happy to send it to you, no cost. So typically, we would set up separate wallets for the NFT project and also the royalties, so the primary and secondaries. And then from there, we would spill into a main operations wallet that pays for your expenses. You might have your smart contract dev that you owe money to. You might have your artists. You might have your marketers. You want to pay it all in specific wallets because it's not like your traditional banking. When we as accountants look at your wallets, everything comes in strings of zeros and X's. We have no way of delineating what these expenses are. So by separating your wallet addresses, it makes it easier for the accounting process to determine what's income and what's an expense, right? And you might have a community treasury wallet, which is important. And then you're gonna want to have a corporate off-ramp. How are you gonna exchange it to fiat, to US dollars to pay your salary for your employees? Maybe you have office rent. Maybe you have subscriptions to Adobe, right? Adobe doesn't take Ethereum. You're gonna want a corporate off-ramp. You don't wanna have your own personal Coinbase or Gemini account linked to any of this stuff. Because now you're KYCing your own self against your company, and now you're running all of your transactions through your personal self, and that causes a huge mess. So you want your own corporate, a separate corporate fiat off-ramp, Gemini, FTX, Coinbase, and then a corporate fiat bank account, like a Mercury bank account or a Silicon Valley bank account. And then from there, you can also take in income for merch and physical products. So it's really important. You can kind of see that there's more to launching an NFT project than having a cool art piece, right? There's more to launching an NFT project than having a strong community. Now, they are both very important, but keep in mind, when you launch an NFT project or even a DAO, you're operating a true operational business. There's responsibilities involved with that. Okay, so now a lot of folks say, Eric, this is a shit show. How do I do financial reporting for this madness? There's way too much going on inside of here, right? So there's a couple of tools that I've used. We've been doing this for NFT founders for a number of years. We advise the chain smokers, Aoki. We do for some of the biggest NFT projects in the US right now. So we use a couple of different tools. The first one is we use what we call crypto to fiat translation tools, right? This helps you pull stuff from the blockchain, from Etherscan, and convert it into a format that a software like QuickBooks can understand. Who has heard of QuickBooks before? Seen a couple hands go up. QuickBooks is one of the leading accounting softwares out there, but there's no integration from QuickBooks to Ethereum. So we use tools like Gilded.finance. A dear friend of mine, Raina, is a co-founder for it. Really cool tool that allows you to pull transactions from Etherscan and then break it into transactions that QuickBooks can read. And then on the tax side of things, we use ZenLedger and CoinTracker to help us track the basis for tax purposes. And then from there, we use traditional accounting softwares like QuickBooks, NetSuite. And then finally, we also utilize for our clients traditional financial tools to do payroll, fundraising, and all that stuff. When you operate in the crypto space, there's multiple transactions happening for each transaction, right? Not only are you reflecting revenue when you mint the project, but you're also reflecting the basis in a token. Now, you might decide to say, hey, as part of my corporate governance, we're going to keep 50% of our tokens in Ethereum and 50% in USDC, and then we're going to exchange it every Friday, and that's your corporate governance. But you need to keep track of the basis of each transaction that happens. And that's super important to keep things super clear and to keep you out of trouble. So my name is Eric. Again, I'm an NFT degen. I absolutely love this space. I'm over-invested by a lot, like many of us in this room are. If you have any questions or you'd like a copy of this presentation, please feel free to hit us up in the email or shoot me a Twitter DM, slide in my DMs. Happy to send you a copy of this presentation. Any questions on accounting or tax for the crypto or NFT space? I see somebody in the back. That's a really good question. So this is kind of the challenge, and even like Solana, for example, Zen Ledger doesn't pick up all the time. So normally what we end up doing is we go into the blockchain and use one of their scanners and export it as a CSV, and that's how we rip all the data. We clean up the data, and then we import it into Zen Ledger. The challenge with the space is it moves so quickly that you have the space innovating so quick, but then now you have all the accounting softwares taking a lot of time to do the development to build up to it. We're moving in such a quick pace in terms of the reporting, in terms of everything. That's a challenge. Even for myself, like, we do this professionally for a living. It's a disaster. It's a lot of work. And we have a huge team to make this happen. So even as an individual investor, I don't really know if there's a clean answer outside of pulling the data, exporting it into a CSV, cleaning the data out, and then importing it into a software. Great question, though. Yes? Yeah, really good question. So when it comes to selling NFTs or any type of NFT projects, I know my time's up, so finish this question up. When you sell any type of product, whether it's digital, like an NFT, or a physical product, you're effectively selling something. So in certain states, they actually have sales tax on digital products. So you're gonna wanna make sure that where you register your business in, you're able to be selling the products you wanna register or sell that product inside of. But in general terms, as long as you sell stuff, the IRS, as long as you report it to them and your income and expense, they're okay with it. So there's no specific, I'm selling a digital product, so I need to have a specific registration. Thanks, everybody. I appreciate your time for spending time talking about NFT, accounting, and taxes. Thank you.
Hey, everybody. My name is Martin. I'm here from Curator Society. I'm really excited to join you all. Thanks for coming. I'm going to grab the clicker here. So what is Curator Society? Curator Society is a membership to a premier metaverse club. We are building a massive blue chip NFT vault to benefit our community. And what does that get you? So we did our Curator's Genesis mint May 31st. We minted out our 1,000 Genesis holders and at 0.16 ETH, and we started building our vault. And each of these NFTs gives you membership to the Curator Society Club and also proportional governance rights to the DAO that administers the Genesis vault. And what are we trying to do here? What we're trying to do is that each of the NFTs acts as your membership to the club. It gives you better access to our roadmap activations. We have metaverse and IRL events, including sponsorship of NFT.NYC and our rig rooftop party on Thursday night, tomorrow night, which is free access to all our holders. We believe that 95% of all NFTs are going to zero, and we want to make sure we invest in the top 5%. What do you get when you have an NFT from Curator Society? Well, for our Genesis holders, we're doing this thing called pass-through governance. So, any benefits, certain of the benefits that accrue to the holders of those underlying NFTs. For example, our first acquisition, basically after our mint, was a mutant ape. Certain of those benefits, including merch and ticket opportunities, we're going to be giving those proportionally to, as fair as we can, to our Genesis community. We also are using, things like you can use any of the PFPs as your PFP. We have our Curator Society logo slapped on them, but we're also exploring ways with our community to further, find value from our vault PFPs, because we expect to have a lot of really top quality projects, and also a portion of the vault reserved for emerging blue chip projects that we'll be doing research on and co-investing alongside our members. And so I want to talk a little bit about that, the club membership part of things. This week we're going to be launching what we're calling the Founders Pass, which is just the club aspect without the DAO governance and without sort of being able to set direction of Curator Society. But we've been putting out regular research reports on blue chips and emerging blue chip projects. We have a vertical alpha group. We call it vertical alpha because not only we have an alpha group in our Discord, but the ability to put money where our mouth is and invest alongside our community members. We have access to premium content, so we have organizational subscriptions to a number of services, including the Origins bot. And we're also going to be bringing in weekly speakers and bringing in projects and some of the most renowned speakers in Web3 to our weekly spaces and Discord AMAs. So as I mentioned, we recently, just a few weeks ago, minted out our Curator's Genesis tokens. We started to deploy some of those funds into a number of key blue chip acquisitions. We're building out our sandbox clubhouse, and we're here for NFT.NYC. Super excited to be here. And later on, we're going to be exploring future partnerships, collabs, and how we can kind of continue to build software and other aims that can further the objectives of Curator Society. This is just us. If you want to take a look, please feel free. Just a bit about the team. I'm Lexicon. My name is Martin. I'm a trained lawyer. I didn't mention this in the deck here, but we're working with Fenwick and West to structure this DAO in a way that allows us to expand to the tens, or if not hundreds of thousands of people. We looked at a number of different ways to structure the organization, thinking about the investor club exemption, which in the U.S. is really important. We decided, we worked with Fenwick on this fairly bespoke structure that allows us to sell not just to accredited investors, not just to those who want a KYC, but to anyone who wants to buy one of our Genesis tokens, and eventually this week our Founders Pass. As a trained lawyer, I was very interested in kind of in this topic. I think we talk a lot about that, but maybe not enough about that in the community. Going around today and yesterday, kind of talking to all these projects, certainly something that isn't necessarily top of mind. And we wanted to make sure when we launched Curator Society, we did so in a way that adequately considered the legal, regulatory, and tax risk of our members. And so that's something that is really important to us. As we sort of continue to build the community, that will continue to be something we think about. So I'll leave it at that. And if anyone has any questions, feel free. If not, we're on this floor in that room just to the left of this room. Thanks a lot.